Life insurance, let's talk about it. So in today's discussion, we're going to talk about term life insurance. What is term life insurance? Term life insurance is guaranteed life insurance that provides coverage at a fixed rate of payments for a specified period of time or term. So here are the pros. Premiums or costs is very low for a substantial death benefit. The premiums does not change. It's the fastest way of building generational wealth and breaking generational curses. Make sure you guys go on my comment section and tell me what type of life insurance policy you have and why. So here are the cons. There's a risk that you may live longer than the term. It's not an investment. There's no cash value. I don't think he knows what he's talking about. There's no investment. There's no cash value. I might as well just go ahead and get a whole life insurance policy. Here's what I recommend, and here's what most people are doing. Here in my previous video is a perfect example to why you should buy term life insurance. For those who have a whole life insurance policy, I got a secret. Here it is. Buy term and invest the difference. Buy term and invest the difference. That's what banks and whole life insurance policies are doing with your money anyway. So why not you benefit? Get your own life insurance policy outside of your job so that way you can first protect your family from financial devastations. It's better to be 5 years too early than to be 5 minutes too late.
Here's another money-saving tip. Shop at home. You know, sometimes we all have that cabinet that has all of the free samples we've got from Sephora or Ulta, or just at the department store. You know, you may have perfume under there, you may have skincare, you may have all kinds of different stuff. So shop at home, pull that stuff out and use it. Or if you have samples from a hotel from business travel or something, you could take those samples of soap and toothpaste and those sort of things and give them to homeless folks or people who are in need of supplies and personal care hygiene. So shop at home, or, you know, donate what you have at home if you can to help someone else. This comes from my friend Kathy. Kathy, thank you. I appreciate this tip. Have a great day.
5 best states to retire in 2023. Number 5, it's Idaho. Idaho is a great state for retirees who are looking for a beautiful, affordable, and tax-friendly place to live. The cost of living in Idaho is lower compared to many other states, and there's no state income tax on Social Security benefits or retirement income. Number 4 is Tennessee. Tennessee is a great place for those who enjoy the laid-back lifestyle. There are plenty of outdoor activities and relatively low cost of living. Number 3 is Texas. Texas has a cost of living that is about 10% lower than the national average. Texas does not tax on Social Security income or retirement income, which can save you a significant amount of money for your retirement. Number 2, it's Arizona. Arizona has many beautiful landscapes, including the Grand Canyon. The state also has no state income tax, which means you don't have to pay state income tax on your 401k withdrawals or Social Security benefits. And the number 1 best state to retire in 2023 is Florida. Florida has the highest percentage of residents who are retired in the nation. It is one of many states that have no inheritance tax or estate tax, and Florida also known for its amazing weather and beautiful beaches.
Did you know that the US student loan debt is 1.77 trillion? Yes, with a T. Now, student loans might seem daunting, but here's a few strategies to help you overcome that. First strategy can be employment assistance. Some employers can offer student loan assistance as a benefit. Take advantage of that. Another strategy is public service loan forgiveness. If you work in public service or nonprofit, there's a public service loan forgiveness program. So after 10 years of payments, the rest of your loans could be forgiven. Also, if you're eligible, don't forget to claim the interest loan student deduction on your taxes. You can reduce the taxable income. For more financial tips and strategies, don't forget to follow.
What's so important about my credit score, and how does it affect my life? Here are 3 ways that your credit score can affect your life, and why. First, loan eligibility and interest rates on loans. Lenders check credit scores to determine whether you're eligible for a loan. A higher score may qualify you for a lower interest rate, while a lower score may lead you to paying more interest over the life of a loan. Next, employment. Many employers may look at credit reports for potential employees as part of the hiring process. And lastly, renting. Many landlords will run credit checks on new tenants before signing a lease agreement. Your credit score is just one indicator of your financial wellness and responsibility, so be sure to check it regularly.
So 3 tips I tell every buyer that's looking to actually purchase a property. If you want to increase your credit score quickly, 1, begin to pay down your credit card debt. That's the first thing I want anybody to do. The second one would be increase the limits that you actually have on those credit cards. The third one would be dispute everything that is on your credit that is not 100% accurate. And I'm not telling you from a realtor standpoint. I'm telling you from my standpoint. When I went through a divorce, I couldn't finance popsicle sticks. But I did these couple of things, and I promise you within, I think it was 6 months to 8 months, my credit score went from a 545 all the way up to about 700. And that was just doing these three things.
Welcome to 12 Days of Financial Fitness. Guess what? It's actually 4 days. That's because I got busy doing work stuff and personal stuff, and Christmas is my favorite time of the year. But I do have 12 days worth of financial fitness tips for you, and I'm going to start with the first one today, and I'm going to consolidate. So I'm going to do 3 in one day over the course of the next 4 days. So we will still have 12 fitness tips for you, financial fitness tips for you, consolidated into a short 4-day time period because Christmas is coming. Woohoo! All right, so pay attention to tip number 1. My first financial fitness tip is don't let the Grinch steal your retirement. And what I mean by that is the financial services industry is filled with Grinches. It's also filled with Santa Clauses and Rudolphs and all those good parts of Christmas. But the Grinch, he's out there, and guess what? He does want to steal your retirement. And what I mean by that is the Grinch is just a metaphor for financial advisors, investment advisors, insurance agents who just really are out to sell you something and make a commission. They in fact suggest solutions before they even get to know you, your goals, your needs, your priorities, your personality, your preferences. All of those things need to be considered. A conversation needs to happen, like a true, deep, soul-searching, and then numbers crunching conversation to figure out what is the right solution for you. So if someone's cramming an annuity down your throat and saying, buy an annuity, never buy an annuity, invest in this, invest in crypto, invest in real estate. Well, you know what? That's putting the cart way, way, way before the horse, or in this case, putting the sled way before the reindeer. So if you run into a Grinch, you need to run away. Don't let the Grinch steal your retirement by selling you a bunch of crappy Christmas gifts that you don't need, that aren't going to be designed for you. My second financial fitness tip is money does grow on Christmas trees. Actually, I like to think of your financial life as a financial tree of life with many different branches. And when you have all these different branches representing different parts of your retirement savings and investments, you will see your money grow. You just need the right combination. You need the right branches on the tree. You don't need a bare tree. You don't just need a single trunk. You don't need a single branch. You need to have different branches. And you need to harness the power and magic of compound interest on your tree to really see your money grow. So compound interest is something that you need to pay attention to, you need to understand, and you need to make sure you're taking advantage of it. Save early, save often, pay yourself first. And my third financial fitness tip for today is about retirement. Guess what? Rudolph never retired, so why should you? I know it sounds kind of funny because my company is her retirement. I work with people to help them retire. But guess what? That old-fashioned concept of retirement is probably out the window for a lot of people because we're living longer, especially us women. We have our health, we have our education, we have our skills. We want to stay active, we want to stay involved, we want to contribute. So one of the ways we do that is we start businesses. Baby boomers are starting businesses at extraordinary rates. We maybe start a new career. We work part-time. You don't have to, quote, retire. Rudolph never did. But what you do want to do is make sure that you have that financial foundation to make retirement optional. So you don't have to continue to work. you secure your financial foundation so that retirement can be optional. Okay, so those are my first 3 financial fitness tips of my 12 days of financial fitness. I'll be back tomorrow for 3 more. Until then, I hope you are preparing for a great holiday season, and here's to getting her done.
It's open enrollment season, and I know a lot of you have received mailers or an email about open enrollment season. Don't you dare let this open enrollment season pass without you making sure that your benefits currently serve you. Do these quick tips before open enrollment season passes. Check the caption below.
Tell me about return of premium life insurance.
So I'm going to give you my professional opinion on that subject. I respect a lot of the social media, financial experts that are out there, but there's one thing that I respect a whole lot more than Brad Leah and Prince Donnell and guys like that, and that's math. All right? So like Prince Donnell said that the ultimate cheat code to getting life insurance is to get return of premium life insurance where you get your money back, right? Well, I'm going to give you an example if that makes sense, right? So if you were offered 2 refrigerators, the first refrigerator A, was $2,000, and he told you they were going to give you back $4,000 in 36 years, like a warranty, so you could go buy another refrigerator, right? Or you had option B, which was $1,000 with no warranty. Which one would you pick?
I would pick A.
Right? A lot of people would pick A, right? But that's because I only gave you that one option of A or B, right? Or 2 options, right? That's only because you saw that. But what I didn't show you is, what do you do with the $1,000 that you saved? If you took that $1,000 and invested it, and listen, I'm not here to talk about like where to get it, but this is possible in the marketplace. If you got 12%, right, over that same 36-year period, it means you made $64,000. So you could go buy your $4,000 refrigerator and still have $60,000 left in profit, right? So he showed you option A, but really didn't show you what B and C was.
Today's saving snack: diversification is your friend. You've got to protect your financial foundation, and that means not being overinvested in any one thing. I read a tragic story about a 30-something who had saved $125,000, and he invested it all in crypto and lost all $125,000. That is the exact opposite of being diversified. I'm Ken Ray, your personal MBA. I went to Harvard Business School, so you don't have to. Diversification is a big word that really means lots of little investments. For example, instead of owning $50,000 of stock in one company, it's much better to own $5,000 worth of stock in 10 companies. It just protects you on the downside. There are all sorts of things you can do to diversify, including buying ETFs, which are exchange-traded funds. I buy one, for example, of the trading symbols DVY. It's an exchange-traded fund focused on companies that pay dividends. So it invests in over 100 different companies that are paying dividends. So again, it's pre-diversified. By buying the ETF, I get 100 companies. Again, all sorts of ETFs out there. The important thing is, though, for you to protect your financial foundation by applying diversification principles. I'm Ken Ray, your personal MBA. Please follow me if this was helpful for more tips in the future.
Don't miss the power of used when it comes to making great financial decisions. I'm Ken Ray, your personal MBA. I went to Harvard Business School, so you don't have to. There's a lot of emphasis on new right now with holiday shopping and the new year almost upon us. But I want you to know that used works, and it works really well. Everything from clothes to cars, electronics, sporting and household goods can be a great used deal. Pick function over flash. You can get some incredible bargains. So before you just go out and automatically buy new, check what's available on eBay, Craigslist, local consignment stores, and even thrift stores like Goodwill and Salvation Army. It might be an absolutely great way for you to save some money. Scoop up what's left of a product's life. Buying used could be a great new way for you to manage your budget. I'm Ken Ray, your personal MBA.
Let me share a secret credit score hack that will boost your credit score.
What is that?
That is, don't wait for your credit card's due date. Be a bit sneaky. Pay it about a week in advance before the statement issue date.
Why?
Because what shows on your statement is what the credit bureau see. And that little snapshot, well, it is like your financial selfie, defining your credit reputation for the next 30 days. So imagine this. You pay it all off on the due date, but your credit still shows you owe money. Annoying, isn't it? Keep that balance low when the statement hits. And you're not just good, you're glittering in the credit score world. Remember, a wicked awesome credit score is not just about paying. It's about when you pay.
Can I tell you some of the best advice I've ever been given when it comes to investing? It centers on this idea that being out of the market is actually the greatest risk that any of us face. She was this old oil man that I used to have lunch with every single day. And I remember during the down market of 2008, things were just absolutely crazy. And he looked at me and he said, "Eric, I know you want to think this time is different, but guess what? It's not. So long as you stay invested, no matter what's happening, you can't lose. It's only when you sell that you lose. But if you stick around, it'll always come back." And you know what? In 2008, I thought he was crazy, but it came back. And we see it happen over and over again. And as I'm filming this video, we're in the middle of a down market. But what if it always comes back? Then maybe that's something I don't need to worry about.
I met somebody last week who is 65 years old and has been buying one property per year since 1988. And he has 27 properties. 26 of them are paid off. He expedited paying them off during COVID. So now he has tens of thousands of dollars in passive income every month. He's 65 years old. He's got plenty of passive income to support him all through retirement. And his properties over his retirement will continue to appreciate even as he takes his passive income. So I loved how easy he was about it. It was one property per year, wasn't a lot of stress, and now he's sitting on top of a great portfolio that's going to support him all through his retirement.
A financial coach, that is somebody who's going to go with you on your mindset, your day-to-day lifestyle. What are some transactions that some expenses you're looking at, like either decreasing or eliminating as a whole. I know a big part of my financial coaching that I do is help you identify your how to use your potato. I'm sitting down. Look, obviously we're looking at credit, and we're if you need to increase your credit score, let's look at your credit report. What are some things we can do to increase that score? Right? We're looking at all of the personal finances and getting into the weeds of what you need to do to get where you want to be. Right?
So this little trick is called becoming an authorized user. Now, the only hook with this, or the only issue you could run into, is finding someone who will let you be an authorized user on their account. Because what we did to immediately bump my wife's credit is I already had a very strong credit score. As a matter of fact, I was over an 800 credit score. So what we did is we went in and we made my wife an authorized user on 2 of my credit cards. We figured out when the bureaus reported. We waited until they reported. The second we knew that the bureaus had reported, then we went in and we had her apply for the loan. That's when her credit score came back as a 774. Now, I know a lot of you are saying, Chandler, there's no way you could bump her credit that much that fast. That's 161 points in under a month. And I know a lot of you are not wanting to believe that, but if you look right here, and I'm going to actually put this up on the screen, this is where her credit score went to. However, her growing up, she put no effort into building credit. And so we hopped on MyFICO just to see where her credit score was, and they wouldn't even tell us what her score was because she literally had no credit. No credit cards, no credit history, no nothing. So we went in to pull her credit for the first time, and when it came back at a 613. Now, a 613 isn't terrible, but it definitely isn't what you need to be able to get approved for a loan. Luckily for my wife, I am very good at helping people to increase their credit score. And so in the course of 30 days, I was able to help her make certain moves to get her from a 613 credit score all the way up to a 774. So she could not only get approved for a loan, but get approved with the best rates on her loan for the first investment property that she purchased. And so in this video, I'm going to show you what we did to bump it up that quickly and what you can do to not only bump your credit up that quickly, but also keep it.
Here are 3 things I've learned to build wealth for my family.
1. Get a living trust to protect your assets.
2. Buy a home so that you could build wealth through your equity. 3. Get permanent life insurance that can benefit you while you're living and benefit your family when you pass.
Without getting into a whole lesson on statistics, standard deviation just gives you an idea for how much you can expect results to vary from the average. For instance, let's say you have 2 funds with the same annualized return, but one of them has crazy ups and downs. The crazy one would have a high standard deviation. The other fund is very consistent and goes up a little bit every year. That fund would have a very low standard deviation. If you were only going to invest for a short period of time, the lower standard deviation would be a more reliable fund to invest in.
All right, let's set your child up for success in the future. We actually welcomed a baby boy last month, if you can't tell by the bags under my eyes. So I've talked about this in the past, but I was actually able to do it for the first time myself, and therefore I want to talk about it again. And the best part about it, it literally takes 2 minutes to accomplish. So what I'm actually talking about is right down below here, adding an authorized user. Below, you'll see really what you're trying to accomplish. Obviously, my infant child is not going to be using a credit card, but what he is going to be doing is building his credit score for the next 18 years. So I did this online, it literally took 2 minutes to get it done. And now what I'm going to be able to do is use my card like I normally would, and it's going to build my child's credit score for him without having to have him do anything. When he becomes 18 and wants to potentially get going to college or applying for his own credit, he's going to have an excellent credit score and an excellent credit history. All right, there's my tip for the day.
Hey guys, I'm here to explain what an IUL is. It actually is a life insurance policy that allows you to become your own bank. You get the safety of a bank, you get the liquidity of your money, but you get extremely high interest rates that you could never get at your local bank. It has death and living benefits. So you ask, how much money should I be putting into this? It's not up to me to decide, it's up to you to stay within your budget. So rule of thumb, take your age and add a 0 to the end. If you're 25, I want you to put away $250. Keep in mind, you're told to put in anywhere from 10 to 15% away for retirement and savings every year. So let's say you're 25 and you put $250 per month and you do that until age 65. You would have put in somewhere in the lines of $123,000 into your account over that time frame. The value in that account at age 65 is going to end up being about $519,000, which will pay you $40,000 a year from the time you retire for the rest of your life. Your IUL, not only is it risk.
How much money do you think you need to earn to be debt-free in 1 year?
Ooh, my kind of question. Debt-free in 1 year. Honestly, like just a regular salary because I'm so low. I would say 40 to 50,000. Very, yeah.
Spot on. 40K.
Yeah.
So attainable.
Yeah, I know.
I mean, there are a lot of people that I run into day to day that are in a terrible mood.
Mm-hmm.
And for a lot of people, it stems from their financial troubles that they're not willing to face. But you are here today facing that head on, and you should feel really good about that.
Thank you.
And I hope that you do. And again, I hope you stop comparing yourself to other people. And at some point, people are going to start comparing themselves to you.
Isn't that a wild concept?
And you should think about that when you're portraying yourself on social media. Is what do you want that person to understand? And people are going to be looking up to you. And you have an opportunity to take the lessons you've learned to help other people. And I hope you're able to do that.
We're going to breathe that in.
Breathe it in. She's in her early 50s. She has 21 cents in her bank account. That's pretty scary. She has $7,500 that's been sent to collections. She's working a part-time job delivering pizzas for 20 to 25 hours a week, making between $15 and $30 on average an hour, which means her total income is between $1,200 and $3,000 per month. Or that means she's making between $14,000 and $36,000 a year. Sounds like she might be semi-retired if she didn't have all this debt looming over her. And what's crazy about this situation is her expenses. The things that she can control in life have totaled up to $2,902 per month.
If you're looking to increase your credit score by 100 points, then this is the one thing that you should be focused on. Most people, when they go to pay their credit card, wait till the day that it's due and they only make a minimum monthly payment. And doing this really impacts your utilization rate, which is just the amount of debt that you've taken out and used divided by the total amount you have access to. And the utilization rate accounts for roughly 30% of the scoring model used by the credit bureaus. So what you want to do is pay that credit card off 10 to 15 days earlier so that your statement getting reported to the bureaus shows a lot lower of a utilization rate. And don't just make the minimum monthly payment. If you're great about staying on top of that, then in 60 to 90 days, you should see a very significant jump in your credit score.
Here are 7 financial tips for people in their 20s. Create a budget, listing all of your expenses and also your income. Pay yourself first before you pay your bills. Treat yourself as your very first bill before you pay other bills. Also, set up an emergency fund and have 3 to 6 months worth of emergencies to help cover you for your rainy days. Open up a retirement account that is giving you compound interest. Acquire life insurance to ensure that you're not only protecting yourself, but you're also protecting your loved ones in case something were to happen to you. Utilize credit and learn how to build your very own credit score. That is very important. Last and least, read a lot of books on finance and self-development. It's very important that you learn how money works, and while you continue to learn how money works, you continue to develop yourself as well by changing the way you think and how you view money.
Welcome to Protection USA's Ultimate Financial Tips. Today, it's 4 proven frugal habits to achieve early retirement. Habit number 1, live within your means to achieve early retirement. Embrace a simpler life and prioritize what truly brings you joy. Habit number 2, avoid impulse buys. Resist impulsive spending. Give yourself a cooling off period before buying non-essentials. Often, the urge fades. Habit number 3, prioritize savings and investments. You gotta maximize your 401k plans up to your employer match. Compound interest works wonders over time. Habit number 4, review your spending habits and cut back on unnecessary costs. Cancel those unused subscriptions. Cut back on the amount of times you go out to dinner, and reduce your utilities. Early retirement's possible if you'll stay disciplined. Start now and take control over your financial future.
What's up, TikTok? Tip of the day. So you're going to go to the Betterment app and create an account. Then you're going to go around your house, your garage, your storage unit, or wherever you have stuff, and you're going to take anything that is 6 months or older that you haven't used, and you're going to sell it. Put it on Facebook Marketplace, Let Go, any of those sites. You're going to sell it. You're going to deposit that money right into your Betterment app. You're going to make your settings for whatever aggressive amount you want your investments to be, and you're going to leave that money go and pretend it doesn't exist, because that money was found money, because these are items you probably weren't going to use and weren't going to sell anyway. So that's the tip of the day, and it's a good one because you'll be earning money off of found money.